This ability to not just use technology, but to disrupt entire industries is a key focus of a similar fund offered by LionGlobal investors called the Disruptive Innovation Fund.
It was created and designed for the man in the street so that he could invest and participate in some of these exciting growth opportunities out there. The team identified many trends, anything from augmented reality to e-commerce to robotics to fintech to e-wallets to even customized medicine, which is made possible by DNA sequencing, made possible by big data. So we've got a stock universe of 500, and the fund is kind of passively managed using a smart beta, or what we call fundamental factor investing methodology.
LionGlobal look at more than just market capitalization. They look at the price to sales ratio to avoid companies with expensive valuations. To identify disruptive companies that have gained a foothold in the market and registered steady growth, they look at the 3-year earnings per share growth forecast and the 90-day price volatility. Lastly, to weed out companies that cannot sustain revenue growth, they look at a 3-year sales growth forecast.
If you think about Netflix, is it a technology company? Probably not. It's a consumer company. And same for Tesla, right? Yeah. So the idea was go with the disruption, identify the disruption trends out there, and then look for the companies which are falling into the pieces, right? There are companies who are pretending to be or looking like a disruptor, but they're not true blue disruptors. Take Toyota, for example. I mean, they've got a big base of internal combustion engine cars. Of course, they've got Prius, and probably they're also exploring electric vehicles. But, you know, Toyota is Toyota, right? It's very difficult for Toyota to kind of reinvent itself and to change the DNA overnight, right? So to us, Toyota is not a disruptor.